right, so we have another morning in the books. I'm up roughly 2 grand on the day. Here is my overnight short in MEDA. This is a pump up from basically a penny a share. I looked for shares, and there were actually 20,000 shares right here to short at Interactive Brokers I saw on that morning. Didn't get it. It collapsed all the way down to 4 cents, so that would have been, a nice 6 cent a share. I probably would have covered it like 5 cents a share, but still made $1,000 on a $2,000 investment. That's the potential you can have when you're shorting pump and dumps. You can literally make 50% in a day. I know many people in finance think that penny stocks are unpredictable, they're manipulated, you should stay away from them, but hopefully I've taught you that they are manipulated, but that manipulation is very predictable. And you can be there when there's a 50% collapse or just before it. And it took, well, I guess it was 3 days that it took to really collapse. But I shorted on the repump. I love shorting. Let me show you actually a 14-day chart so you can get the whole idea. You short when it goes up here. I wasn't going to short it here at 5, 6, 7, 8 cents. I don't like shorting stocks under $1 a share. So when I'm shorting a 10-cent stock, I want to make sure that it's damn well the top. Like, I want it to be up a ton. And up from 1 cent to 10 cent qualifies, especially when you start to have fading volume as the pump starts to die. Then you cover into this panic every single time. Then we got a nice little dead pump bounce where the volume is now just absolutely pathetic compared to the initial pump because, frankly, no matter how many emails you send out, people just don't want to buy a stock that's up 1,000%. Even here at 4 cents, I mean, it's up 400%. That's too much for a company that, is probably going to get halted or go out of business eventually. But here it starts coming back to 10 cents. I didn't catch the exact top at 10 cents, but yesterday I shorted it because I thought it was going to panic right away. More importantly, there were shares to short at Interactive Brokers. So I grabbed 50,000 shares at roughly 9.5 cents. Some people were like, Tim, you say never short stocks under $1 a share. I wish I could go back and edit like old DVDs where, I say always do this or never do this. They're all guidelines, okay? I don't like shorting stocks under $1. I don't like shorting stocks under 10 cents. But when there's a good trade opportunity, that doesn't mean that I'm going to totally ignore it. Shorting pump and dumps, I tend to bend the rules a little bit just because it works so much of the time. ECRY, I shorted it before it dropped 80%, and that never hit $1 a share. So in my new DVD, How to Make Millions, I have helped you understand that the rules are all bendable. My top student, Tim Grittani, doesn't even trade the same exact strategy anymore that he once did, but he learned to create his own strategies from the initial strategy that I taught him. So it all is kind of a stew, and it just all blends together. Anyways, I shorted it at 9.5 cents. With the goal of it coming back down here to 7.654. Today we got a nice morning panic from 9.5 down to 8. But I think this is just the beginning. So I'm still holding short. It's down a little bit on the day, but the volume continues to fade. I'll try and give this some time to make 20, 30, 40, 50% on my money. It's only going to take, I think, another day or two. But then also, I know finding shares to short is tough, and it's kind of an annoying process. So every now and then, I like to buy earnings winners. And earnings winners are not an exact science. Here is ZAGG. You can see here on the 1-year graph, it's clearly a nice breakout over 5.2, and more importantly, the recent range here at 595. And the top here was like 602. So I started a position yesterday when it was at 602, right in here on this dip. I was trying to get on here at 597 because I thought that was just some panic selling and maybe some stop losses going off when it took out 6. But it's usually a pretty good idea to buy an earnings winner near technical support that's already 30 cents a share off of its highs. Especially if you read the PR that ZAGG put out, they doubled profit estimates. They have rising sales with iPhones and iPads. and increasing margins, but they doubled their profit estimates. And the stock is only up 15% because it's still debatable whether they have, a business model that's going to work over the long term. But no matter what you want to debate the long term, it's a multi-month, multi-year technical breakout with strong earnings. So you have to buy this on dips. Props to one of my Trading Challenge students, Mark Crook, who, G-chatted me, and he was like telling me, yeah, you're going to buy this, aren't you? And, when I bought it, I bought it on the dip here at around 2:30. That's a little earlier than I usually buy, but the price was right, so I couldn't wait. And he was like, you're supposed to wait until later in the day. He's watched all of my video lessons 4 times, so he knows the strategy. He's been predicting my trades left and right lately. He predicted my Vigil buy the other day. If you watch all these video lessons and DVDs, I know some people are like, God, it gets so old, stop talking about that. Well, that is the key to the success. Example after example, video lesson after video lesson. You Trading Challenge students have access to webinars where I go over tons of examples. And, this will help you understand why I'm buying a stock like ZAGG. So many people are throwing out random stock picks and they're not even focusing on what I do best. And that is buying earnings winners on dips near technical support or buying breakouts. And buying dips worked fantastically, from 602 all the way up to the high of 645, you're making 40 cents a share. I had like 5,700 shares. I would have made 2,000. I should have just stuck with that. That would have been my whole trade right there. But I added to my position into the close yesterday because it was breaking above this 618 level, and it kind of topped here at 620. That was not necessarily the best close. I wanted it to break out higher. After hours, it was like at 624 though, so I felt pretty good about my odds of a spike today. We actually got a little dip here into the low sixes. I tried adding to my position here on this dip, and I didn't get filled, and that sucks. That would have been nice, but it went up and it broke 620, in the first 10 minutes. So I was happy about that, and it went to 630. But then it kind of double topped. Yesterday's high was 631, and it went straight to 631, and then it was right back to the 620. So I'm saying, oh my God, it broke 620, but now you have a double top at 631. So I'm getting all out here in the mid 620s, thinking that this double top is going to hold. And then, sure enough, as I'm, basically writing my alert, it's breaking out. And that happens sometimes. I trade and then I write like within seconds, but sometimes the stocks move within seconds. And, so in the middle of the alert, I have to alert that I just sold. In the 620s, I made like $1,500, blah, blah, blah. And then it breaks out. So as I was writing it, I think it was like 640 or 645. And I'm like, yeah, if I had held until 640, I wouldn't have gotten 645. It was only there for like a minute. But let's say 640-ish, I'm making 20, 25 cents a share. I'm making 5 or 6 grand. So that was the potential to make 5 or 6 grand. Instead, I made 1,500. Not the end of the world. Went back down to 620. Wasn't sure if it was going to break below it, and now it's hanging around 627. So the key is, this is not a fast mover. I said this in last night's video lesson, but the key on some slow mover earnings plays is to buy the dip and look for where technical support is. So I was buying it at 602 yesterday because if you look at the chart, the high here was obviously 620 and 620. That was huge. But then, this whole little 2-week time frame, the high was like 590, 595. So I'm looking at support at around 595, and I'm expecting 620 to break. That was the whole plan. Normally I say don't scalp. I want to play more volatile stocks, but when you have such a perfect earnings release and catalyst, and really the fact that this is kind of a cheap way to play Apple, because they're really benefiting from the blowout iPhone 6. And I still think that this is going to have more potential to run up, but there are just some weird big sellers, and that's why you can't just buy the breakout. I kind of screwed up my own trade because I was trying to go bigger at 618, thinking that this could run to 640, 650. It did run to 640, but buying it right at the breakout on a slow-moving stock, it's just tough because you see it's choppy and you get faked out. And the real key to buying a slow-moving earnings winner is if you can get it on a dip. Um, you know, any day. Yesterday, and this is a confusing thing for a lot of people. I mean, yesterday you say, okay, Tim, I'm going to follow your strategy. I'm going to look for big percent gainers. I'm going to buy an earnings winner, right? And so you see this stock is up 15, 20%. You read the press release, and you're like, wow, this is a great earnings release. And you buy it somewhere here, 615, 620, maybe even 630. And, you watch it go down to 6. You're like, oh, the strategy sucks. Maybe you even cut losses quickly if you're going to follow my rules like that. And now you see it at 625, and you're like, well, at best case, I would have broken even. Absolute best case, if I had sold into this 1 minute spike, I could have made, 10 cents a share. But if you're buying it just randomly yesterday at 620, 630, you have 20 or 30 cents of downside and only like 15 cents of upside. This is not a good entry. You don't know what's going to happen, but this is why I don't like to buy an earnings winner in the morning and just randomly. Try and have a thesis. I don't like buying stocks at 2 or 2:30 p.m., but the reason why I went into this is because at least there was technical support in the 590s and 6. So when I'm buying a stock that's now, the day high. The day high was already 630. So earnings winners tend to go back to the day high. So now if it goes back to the day high, which it did today, and now it's just recently bounced off 630 again, by buying it here at 6, it gives you 30 cents a share of upside. And you know that there's support at 595. So by my initial buy at 602 was perfect. Whether you buy 5,700 shares like me, or if you have a smaller account, you buy 1,000 shares here at 602, 601, and you risk it. It could keep coming down, and if it breaks support at 595, then you get out and you lose 5 or 10 cents a share. But most likely support is going to hold, which it did. And, buying it here on the dip, just above support. So at worst, you're going to lose 5 or 10 cents a share. But at best, if it goes back to the day high or hopefully breaks the day high, which it did, you have 40 cents a share of upside. And, I probably would have, if I had waited for it to break this high of 630, I probably would have thought it would go to 650. But this is just a weird stock. And you have to recognize that sometimes. When there's big sellers at key levels like 620, and, now it's 630 and there's big sellers. I mean, there's big sellers at every level. This is not a stock that's really going to just, go to $7 a share very easily because there's big sellers preventing it every step of the way. So, again, just to recap, by buying an earnings winner near the day lows, that protects you. As long as there's technical support, ideally from multiple weeks and multiple months before. And then you have this setup where there's good risk reward. Always try and have setups where there's good risk reward, where there's more upside than downside. On a stock like MEDA, where I'm shorting this pump and dump and I'm shorting it at 9.5 cents here, yes, it could go higher. But for me, I think that this is going to collapse 5 cents a share. And if it goes up like a penny or two, I'm probably going to cut losses quickly. So at worst, I'm going to lose a penny or two. And at best, I'm going to make 5 cents a share. So again, there's more potential reward for me than risk. And I'm on the right side of the equation. I'm shorting a pump and dump. Just like ZAGG, I think I'm on the right side of the equation where if you're on the right side of the equation, good things tend to happen. If you're buying a stock like ZAGG, there could be an an analyst report out overnight or some article written about how this is a cheap way to play Apple. MEDA, if you're shorting a pump and dump, there's a chance that there might be an article, there might be an SEC halt, there might be an expose. So you want to be on the right side and you want to have, a good idea of the right chart pattern. And that's what trading comes down to, or at least for me, where I have the chart pattern on my side. I've done my analysis with risk reward, and I have the fact that, MEDA we know is inevitably going to crash on my side. So it's better to be short overnight because at one of these nights it is going to crash. So this is how I play my odds. Congrats. I'll see you guys in the chat room.